Hello everyone, welcome to this video. In this video I'd like to talk to you about bubbles. Why? Because it seems as if day after day all over the world stock markets are breaking records, even though the global economic situation is not that well. The same actually goes for gold. It seems that the sky's the limit for gold currently, and in certain countries it also goes actually for housing prices. So the question is, are we nowadays still paying for something's value and just the value, or are we really overpaying, and is there a risk attached to this? So the questions in this video are, what is a bubble? Where do these bubbles come from? Are there any risks attached to these bubbles? And eventually, what can we do to prevent being hurt by such a bubble? So without any further ado, let's jump into the topic. So a bubble is a situation where, because we are willing to pay so much more for something than its value, this thing, which can be a stock, it can be a house, it can be gold, this thing continues to increase in price, even though its value does not. And this is a very dangerous situation. So a stock can, let's say, have a value of $100, but if you're willing to pay $1,000 today, $10,000 tomorrow, then of course this can lead to very dangerous situations because bubbles can burst. We have seen in the 2000s the dot-com bubble bursting because we thought that internet companies in the 2000s were able to deliver so much more than they eventually were able to do so. In 2008, we saw the housing bubble burst. Why? Because banks were giving consumers so much money and they could buy so many houses that housing prices were flying to the sky because there wasn't that much supply compared to the demand for houses. But then, when people figured out that houses were not that much worth and that banks had actually been very reckless in giving the money, we saw the housing bubble burst. Nowadays, what we're thinking about is whether the stock market and whether gold are actually bubbles, yes or no, and whether we are actually paying amounts that the stock market is worth, that gold is worth, or whether we're overpaying because of a combination of factors, trends, or, for example, fear in the case of gold. So the question is, of course, where do these bubbles come from? Because we can actually find the value of something, right? We can find the value of a house if we look at how big it is and how much rents we can accrue from a house. And we can actually also calculate how well companies do, right? We can look at their revenues, we can look at their profits, and from there we can actually also calculate the current value of a company. But the problem is that when we buy something, so when we buy a house or when we buy stocks or gold, we're doing so in the hope that this is going to increase in value, right? So we also want to account for the future. We also want to have a situation where we, let's say, buy a stock for $1,000 and that it is going to be $2,000 worth tomorrow and that we can sell it and then have profits from it, right? And that's totally okay. And it meant that that's basically the essence of an investment. The problem is that sometimes, because of media, because of trends, because of people around us, we're getting in a self-reinforcing situation where all the time something's price is increasing without the value underneath it not being so. For example, if you think about electric cars, there's a certain sentiment, governments are going towards electric vehicles, incentivizing it, having all sorts of policies for it, a green world and so on. Of course, this is all a pro for electric cars. But if you look at Tesla having barely made profits until now, and if you look at Nikola having still, not sold any car, the question is, the amounts that we're paying for stocks of these companies, is it worth it? Because these companies have not really demonstrated anything today in terms of value. And if you look at Uber, also it's barely making profits for the past 10 years, but the ridiculous amounts of money that we're willing to pay for it, this can just be answered by the fact that we are thinking that these companies are going to deliver something in the future. But are we really thinking so? Or is it because of media? Is it because of our surroundings that we're willing to pay so much for these companies? Especially if you compare it to other companies that have already proven themselves. How much better can these companies actually be? So the amounts that we're willing to pay are often partially substantiated, right? So there's really a reason that people are interested in Tesla, in Nikola, and Uber, because they really are doing something, right? They're changing the way of passenger transportation in terms of Uber, or for example, food delivery or whatever. And of course, Nikola and Tesla are trying to change the way in which we are thinking about cars, vehicles, and so they're trying to change the car industry to the electric car paradigm. But the amounts that we're paying, if we look at profitability to debt to revenues, are we not going too far? And are we not thinking that the sky is the limit, even though it perhaps might not be? So the question is, we might have to hang tight here, because if we look at underlying values, we might actually be in a bubble that at some point might burst, but we don't know when, because stock markets currently are booming, but particularly so because of the tech companies underlying these stock markets. So in such a situation, it's very important that we calculate the value, of course, right? And that we are making sure that we are not paying for something what we are not able to miss, right? If we look at our own income and if we look at our own money in the bank account, we need to have financial discipline and not spend more money for a house, for gold, for stocks or whatever than we are able to miss, because otherwise, if the bubble bursts, we'll be shooting ourselves in our foot. On top of this, there are, for example, in the stock market, a lot of mechanisms that can prevent you from losing more than you may want to lose, such as a stop loss mechanism where you can indicate below which value you don't want to be and that you want to offer your stocks to the market in such a way when bubbles burst, you won't be someone that's being stuck in a bubble. I hope you enjoyed the video. If so, please don't forget to hit the like and the subscribe buttons. I wish you all the best in the world and hope you won't be stuck in a bubble anytime soon. Take care and hope to see you also in future videos.